Good morning, everybody. How are we all doing? I've got a cold, as you can probably tell by my voice. Morning, Danny. Morning, Wishek. Morning, Soul Trader, Monkey, Mumble, Marco, Comfortably Crumbs. How are we all doing? So yeah, I'm this morning. Don't know why. Because it's not really sunny anymore. We've had winter, summer. I can't even talk. Like, we've had summer, so it's winter now. So immediately get a cold. Right, let's have a quick look at what's going on with the indices this morning. We'll go over the news, usual stuff this morning. We'll cover the news, see what's coming up this week. Have a look at what happened in FX on Friday. Quite a big day on Friday, movement-wise. ORB is going strong. I fixed the dashboard, by the way. A couple of people mentioned that there was an issue with the dashboard on MT5. So I fixed that and put an update out for it on Friday. So if you're in an account where it hasn't got trading history for each week, it went mad and started putting in random dates and random trade numbers. So I fixed that bug, basically, so it obviously reads back properly. So you see these 2 weeks here. I had no trade activity, but I did the week before. That's what screwed it up. It's rare. This is why I've never found the bug, because I've never not traded in a week. So I've never had a flat P&L in a week. So that's all fixed, by the way. If you want to go and get the latest version, it's on the website. I've also uploaded it onto MQL5 if you've got the MQL5 version. That's only for MetaTrader 5, not 4. Morning, Franco. So DAX this morning. We are a gap up scenario this morning. So it's ever so slight. We kind of opened at 7 o'clock, pretty much where we left off. So it's debatable whether there's even a gap there, to be honest. But we're going bull at the 5-minute open. Upside target today. You've got yesterday's high, which is which is Friday's high. So that's quite a fair old distance. So ADR is up there, basically. So it's a fair old way to go. We've got to get pretty much an ADR to get to Friday's high. So that's a decent upside target today. We are basically trading straight up into this kind of support area that we had from Friday and Thursday's kind of low at the end of the New York session. So there's potential that this could act as a resistance today as well, exactly where we are. So we'll see. Wait for the 5-minute ORB to go in. We'll see where we break. The downside target obviously would be Friday's low, which is down here. That's where we bounced on Friday, which was a previous level I drew in, which is here. Yep, so we bounced off of this area on Friday. So yeah, that's your downside target. Just go to these lines. Okay, stick one up there. Right, so that's DAX. So we'll see where we go with that. We got 1 minute. Let's just see what the open does. See if we get a trade on the opening range. Good. So we're nicely pulling back inside the opening 5-minute candle. So should be fairly middle, ready for a run at the high or the low. There we go. So 1 bar range is good, just about, very, very much just about. So it's just over 0.15 ADR. So if you're trading on 20% of ADR, you probably won't have that 1 bar range to trade, but you'll be able to trade the next 10 or 15. Friday was a really good day. Did 7% on Friday. Really nice clean breaks. You couldn't fail to make money on Friday. It was impossible not to make money Friday with the ORB strategy. That was your 5-minute range on the Dow. Straight down. Couldn't do anything but make money on that on Friday. NASDAQ, same thing. That was your 5-minute range. It did break out and pull back and stop out on the first attempt. Second attempt, straight down. Easy peasy. Came out of that support that we identified. And gold as well. Not as good on gold. So that was the break on gold. Went straight up, hit target 1, came down, stopped out on the second part of it. So again, what we were talking about on Friday about diversification, that obviously broke to the upside, gold. So we had a long on it. The indices broke to the downside. So not the same thing. So keeping our powder sort of diversified across different instruments so that we can, so we don't get basically those massive days where we win on everything. We don't get those massive losing days either. We're sort of going to be a little bit more diversified and safe with instruments. Right, nothing happening on that at the moment. Over the weekend, there's not really a lot of news on the weekend. We had some noise coming out of Trump's camp. Nothing particularly exciting. There's been some news with OPEC. They're hiking production, basically, which is obviously negative for oil pricing. The more supply there is, the cheaper the prices tend to be. However, we are coming down into the $60 a barrel level, which they don't like trading below. So as you can see, this is the previous month's low, 3-week low. That's last week's low on Friday. We bounced off of the 3-week low and monthly low on Friday. So we'll see. That increased production is bearish. However, it may be that they're just not happy to go below that price and we're going to stick at that level. So we'll see what happens. But, you know, this area here, the $60 a barrel mark, they don't like going below it. There is room to move down into support, but we'll see. I think they're probably going to hold this level. But opportunity on gold and oil from Friday, if you got into that, you had to take basically that there, the reversal alert, that down there. But nice little bounce. Upside target, you'd be looking at 200 ADR today or sometime this week. Right, news this week. It's a bit light on the ground this week until Thursday. So all we've got tomorrow is Schlegel speaking, and also on Wednesday morning. So potential Swiss franc volatility coming in tomorrow and Wednesday. We've got PPI on Wednesday as well. On Wednesday for the dollar. So the PPI numbers have been, as you can see, very bearish recently. Basically, we know that we're dropping interest rates over the next, in next week, is it? It's next week, I think, for the dollar. So we've had lots and lots of bearish figures on this. We're expecting the dollar to drop because of the interest rate drop. They're potentially going to go 0.5% interest rate instead of 0.25%, which is bearish. We've got figures coming out which are bearish. So when you get this PPI figure coming out on Wednesday, if that number is bearish, we should be seeing a big drop start in the dollar. The market, I think, is looking for an opportunity to start that cascade effect and get that dollar down. So as you can see, we had a very nice rally against the dollar on Friday. Pull back, potentially that's the next move. So that PPI number that comes out on Wednesday could well start a big move if they don't start it already in preparation for that interest rate drop. Thursday, we've got some Royal Bank of New Zealand talk, but the main news on Thursday is the interest rate for the euro. So 2.15 is the forecast. There's no reason why we shouldn't get that forecast. You can see that they've been gradually dropping those interest rates. So 3.15, 2.9, 2.65, 2.4, 2.15. Lagarde said they are going to freeze the interest rates next time round. That is the forecast. So we should get a freeze on interest rates, which is neutral for the euro. So it's not going to be bearish, not going to be bullish. They're pretty much at target where they want to be. So there's no reason to drop those interest rates any further. Nothing's changed in the Eurozone. So we will probably get a whipsaw off the back of that, or maybe virtually no movement at all. We may even have one of those interest rate announcements where we don't even get an ADR of movement. It just doesn't do anything. So monetary policy statement comes out. This is the main news on Thursday. The press conference, this is where Lagarde's going to give her forward guidance on which way we're going with interest rates next month. That's what the banks and institutions are interested in. Should we start buying or should we start selling the euro for the next 4 weeks? So that's where you're going to get the movement at 1.45. So somewhere around about 2 o'clock, 2:15, we tend to start to see that euro move if there is a reason to. If she's going to freeze rates again, we won't see much movement. So that's your main potential big impact news event this week. squeezed in between, we've got the second biggest news event of the week, which is CPI, which comes out at 1:30. So again, interest rates are coming down in the US. We can see that we've had dropping inflation, which is, good. So, or rather lower than forecast inflation. So although obviously inflation is a bit sticky in the US at the minute, we keep getting better than forecast numbers with it. So it's bearish all the way for the dollar. If we get, again, we've got the PPI numbers coming out on Tuesday. If on Thursday we get that CPI number all coming out lower than the forecast as well, that's pretty much going to bang the nail in the coffin on interest rates on Thursday next week, and they will drop them. So I think it's next week, isn't it? Let me just double check that. Yeah, FOMC. So next Wednesday, the 17th. So, yeah, if we get negative PPI numbers and we get negative CPI numbers, you can pretty much guarantee a 0.5% rate drop. The market has already started to factor that in. This will be confirmation. So this is where we're really going to see that move start in the dollar to the downside. So buy pound US dollar, buy euro US dollar, sell US dollar CAD, sell US dollar yen, etc. So negative dollar. But we need to see those numbers come in and confirm, basically. And then going into Friday, we've got GDP for the pound. Poor old pound has not been very good recently. So GDP numbers mixed. The recent one we had are better than expected, but it's not going particularly well for the pound, is it? So there's potential movement on the pound on Friday, and then we've got Michigan on Friday as well. The market sometimes moves, sometimes doesn't on that. Very random. So we'll see where we go on Friday, but it's all focused around mainly Thursday this week, but obviously Wednesday is when we start to build up. Right. So break long on the DAX this morning. Not very convincing at all. So 10-minute candle just about tapped out 5-minute, and then we're getting a rejection on the 15. So your 15-minute ORB is going to go in there. If you haven't managed to get on the 5 or the 10, that's your range today. Not looking particularly exciting, is it, today? Not a lot of volume. Boring. Right. I still haven't got my MT5 account set up for position trading yet. I'm hoping to do that I will be doing that this week. So I'll be ready for position trading again. I'm just trying to figure out what I'm going to trade over the next 6 months. I'm just looking at diversification basically on the pairs. So I'm looking to put together a nice little basket of symbols, but I can't really find. I don't really want to trade the yen, and I certainly don't want to trade two of them. So I'm still thinking about what I'm going to trade position trading wise moving forward. I definitely want to be trading one of the majors with the US. But as you can see, it kind of leaves you with a load of Swiss and a load of yen opportunities. So I'm just struggling at the moment to put together a decent basket for position trading. I'm going to do a bit of back testing on the last kind of 6-8 months on the yen. So if we look at the yen since the intervention, we'll go back a fair way now, haven't we? There we are. So all the way back to July 2024 was that big intervention move. God, every year now is that, blimey. Seems like yesterday. So as you can see, since that intervention, we've had this move which kind of has stabilized now over the last sort of 3 or 4 months. So what I was going to do was run some back tests for this year since January. So we've got, sort of 8-9 months worth of data. It's not a very big test bed at all for the yen. But I want to see how position trading has reacted with standard 3/4 ADR scale-ins, standard sort of 1.2 lot multiplication, etc. So I just want to see how it's been, how it would have traded during this bear run and during this accumulation stage here, just to see whether or not it's worth introducing back into the portfolio. The problem is the swaps for me are still a little bit too high on most of the yen pairs. So it's about finding one that hasn't got massive swaps. The Swiss yen is the one which makes the most sense, but obviously you're trading two safe havens together there, which means you tend to get either no movement or real squeezy movement. So I'm just trying to find some yen to introduce that kind of makes sense at the moment. So I'm still kind of working on it, but the back testing is going to give me an idea as to what would have happened from a profit perspective since we had the intervention move. So I guess what you could probably do is take the intervention move, which is that leg there, and then the recovery of it, and sort of go from probably September last year. So maybe I'll do a test for 6 months and then a test for 12, and just see how it's performed, the yen. I know the swaps are going to be fairly expensive on those shorts, and we've had quite a long short run, so it's a little bit tricky to sort of gauge. But so yeah, that's the plan for this week, is to try and get that together and get myself back to a full portfolio that I can position trade. I'm still in the Aussie New Zealand. I've got my aggressive drawdown control positions from resistance here. So it's in profit. As you can see, an ADR moved to the downside today. I'm out with a nice profit. So I've got break evens on my aggressive drawdown control positions, which are here. So worst case scenario, if it pops up and retests, I'm just going to break even on them and try and add them back again. If we drop today, come down and test the 2-week high or last week's low, that's a very, very healthy profit. But I've got a break even, which is literally now 7 pips away. Yeah, so a quarter of an ADR, and I'm back to break even on it. So like I said last week, there's an argument for me not shutting this account down and transferring the funds out and holding this to see if we can come and retest that propulsion gap, because that's a massive profit. I've got myself into a really good position here, short, completely protected, with the opportunity to make sort of 10 to 15%. Don't come around very often. It's one of the advantages of doing aggressive drawdown control. If you time aggressive drawdown control correctly and it works, and it's a major resistance like the one that we're at the moment, the potential on this is to come back down, potentially form a range low down here, or at least form an intermediate range somewhere, which could even be there. So even if it forms an intermediate range there at 50% of that entire leg, which is through that propulsion gap, that is a huge profit. So, you get these trades every now and again where you look at it and think, shall I turn it into a long-term investment hold for the next 3 or 4 weeks and milk it? Or shall I just play it safe, get myself out of break even, go, oh, well, that didn't work, didn't lose any money, and just get out and then carry on as normal. So I'm still toying with what to do with that one. Indecision creeping in, because at the moment I've got virtually no drawdown on it and huge profit potential. We'll see. Japan PM is stepping down, is he? I didn't see that. Oh, yes. Ishida to step down as leader. So that's going to create some potential volatility in the yen. I've had some figures through this morning. But other than that, overnight-wise, there's not really a lot else going on, basically. So just want to see. Let's see if that's affected the yen this morning. Can't really tell with that one. Yeah, so we've got a gap up. So weakness in the yen. It is gap filling, though. So it's an immediate knee-jerk reaction. Panic, pull a bit of money out the yen. Actually, does it make any impact? No. So it's pretty safe. If that had gapped up and gone 200 ADR, you got to think twice about it. But this is the thing with position trading. If you're in a position and it does that sort of thing, there's nothing you can do about it. You just have to manage it. It's just part of trading. If you get a news event that goes against you and changes the fundamental bias on something when you're in it, it's going to be a squeeze. You just have to accept it, deal with it. That's part of the job, is dealing with squeezes. But as you can see here, 5 weeks, summer trading sideways. Load of rubbish, isn't it? So that propulsion gap is holding at the moment, but that is highly unlikely, isn't it? We're dropping interest rates, so that's the target to the downside at the moment on the US dollar yen. But it's just so expensive to trade still. This is a problem. Right, DAX inside bar, 15-minute. So there's your 15-minute range. We are back basically inside the range. There's no volume today. Can't do anything with that today. It's just not moving. Load of rubbish. And lately it seems yen lost a bit of its appeal as a safe haven. Yeah, so basically the reason the carry trade was there, the safe haven stroke carry trade situation with the Japanese yen, it's been there for years, especially since COVID, even more since COVID, as you can see. But the idea of selling the yen and the swaps basically paying you has been one of the central bank's major strategies for decades, because the Japanese have had negative interest rates for decades. They've changed that now. We are not negative interest rates with the Japanese yen anymore. So you've got this thing now where since this intervention, the attempted interventions we've previously had, which worked for a short amount of time, since this intervention, they've kind of destroyed all of their overseas US bond holdings, meaning that they can't do these intervention moves anymore. But they've timed it so that they have increased their interest rates back to not normal levels with the rest of the sort of G8, or G7, but back to a more normalized level. So they're using interest rates to control inflation. So we shouldn't really see any intervention moves like this in the future, because they haven't really got any overseas assets to liquidate to do these moves anymore. And secondly, now we're using interest rates to control inflation. You're going to see this start to be traded normally as interest rates rise and drop throughout the other currencies and the yen. So at the moment, this is more like the Swiss franc in the fact that it's got low interest rates for the time being, which means that when you have anything going on in the world which is causing fear, you will tend to put your money in here because the interest rates are low and stable. You know you're not going to make a big return on them, but equally you're not going to make a big loss on them. That's what a safe haven is. It's somewhere to put your money where you're not going to be dramatically affected by world events. If something happens, the Swiss franc doesn't move because the Swiss are not in NATO. They're not involved in conflicts. They're not part of Europe with the euro. They're a standalone, highly liquid country where you can put your money in, know it's safe. At the moment, the Japanese yen was the same because they were able to manipulate their currency up and down to make themselves attractive, and that was, in effect, keeping that stability. They don't have that anymore. So I'm not sure that this is going to be a safe haven moving forward. It's not somewhere you dump your money to make a positive return. You do at the moment, right now, but I don't think that's going to be long-term what's going to happen with it. So it's very interesting because it's, when you've been trading for such a long time, you see these things come along every now and again, like the Swiss franc peg removal. They're things that come along which just change completely the way a particular currency is traded for good. And nobody knows what it's going to be. When they removed the Swiss franc peg, we had absolutely no idea what was going to happen with the Swiss franc. It was like, what do we do now? Yeah. That's the Swiss franc peg removal. Yeah, that's one day. Yeah, that's a normal day. That's a big day in the Swiss. That's the peg removal. Since that day, we were like, now what do we do? Well, for a start, we couldn't trade because all the bank brokers went bankrupt. But, what do you do from there? The Swiss became independent and became a safe haven because it made sure that it kept its currency stable. Yeah, it's become more volatile over recent times, but it's, that's the change that's coming with the yen. So for me, having some of it in the portfolio does make sense, but not too much. I don't want to overexpose myself on it. I'd rather just keep one exposure on the yen. And again, this recommended portfolio, there's 3 Swiss in there. It's no good. So pound, probably want to do something. Maybe euro yen is probably the way to go with it. And then something New Zealand based. Yeah, so that gives me Swiss franc exposure as well. But, I'm running out of exposure. Difficult. It's really difficult to get a diversified portfolio at the moment. Everything seems to be flat and moving together. Maybe I should try daily and look at the last 50 days and see what sort of portfolio that gives you. Yeah, see that gives me 1 yen exposure. That's better. Still 3 Swiss in there, which is dangerous. So I've got some work to do, basically. It may be that I need to use a higher threshold. Yeah, see a higher threshold there. So what I'm saying here is basically I'll allow things which are up to 70% correlated, i.e. they move in the same way, in the same direction on a daily basis, 70% of the time. 30% of the time they're doing something different. So that is a more risky portfolio, but it gives me the ability to trade 14 symbols. We got 1, 2, 3, 4 yen in there. 1, 2, 3 Swiss. See, I really, really want the pound or the euro US dollar in there, and I haven't got it. I want a major in there. There you go. So if I take the euro yen out, the US dollar yen out, I can swap that for the euro US dollar. Don't know. I've got some thinking to do, basically. So rebroken along on the DAX. We just tapped straight up into high of the day. And rejecting. There's no volume today, is it? It's rubbish. It's going to be one of those days today. Right. FX-wise. So if we look at Friday, I'm still in MT4 at the moment. I'm just getting the support resistance propulsion indicator done. Friday, we had some very decent movement against the dollar. So a big sell-off against the dollar on Friday's news. I need to go back to Forex Factory, last week's news. So obviously the unemployment rate came out as forecast, and we had a slight drop in the non-farm payroll figures. So market used that to sell off some of the dollar. We went straight up into this previous high, basically, and rejected back down from it. But that is the expected movement now. So I think market structure is starting to get going on the dollar. And the Canadian as well. The poor old Canadians had a terrible time last week. So the unemployment rate again has gone up in Canada. So it's another one of those. If you look at the Canadians' latest news, so this gives you a list of all the latest news events in Canada. You can see that unemployment rate when it loads. Must sort this out so it loads quicker. So, IVPMIs came out, not very strong IVPMI, but massively bearish. Unemployment rate came out bearish. Unemployment change bearish. GDP bearish. Yeah. So for the last sort of week, the Canadian dollar has been absolutely hammered. And obviously you saw that with everything pushing against the Canadian on Friday. So market using Friday as an excuse to dump the Canadian, dump the dollar, getting ready for that interest rate change, which is coming in next week. Pound coming down against the Australian dollar this morning. Australian dollar is looking strong this morning. New Zealand dollar looking stronger. There you go. So big move up on the Aussie there, but New Zealand dollar moving much, much stronger. So if you look at the New Zealand, that's up at ADR already today. Big moves. So ADRs on New Zealand dollar this morning. You got some RSI extensions as well to look at. CAD Swiss is extended on the RSI, so opportunity for an entry there. Again, Canadian dollar. This is one of those, do you really want to be buying the CAD at the moment? Not quite sure. But it's a very, very good opportunity on the hourly and the 4 hourly. Look, so 4 hourly extension there, 4 hourly RSI extension. We are really nicely embedded down there. So it's equivalent to this type of movement. Yeah, potentially we have got another ADR or so to drop, which could happen. And then we'll be looking to pop back up into propulsion. Yeah, come back up and test that propulsion gap. So in the future, coming back up into here. Downside on that, oh, you haven't got any. So yeah, we're down into all-time low territory now on the Canadian dollar. US pummeling it into the floor. So yeah, CAD Swiss opportunity for longs, but bear in mind you're in all-time low territory, so it's very difficult to know where you're going because there's no support to look at. Swiss yen, also big extension on the Swiss yen. That's to do with the gap. So that's where you were on Friday, look. So it was extended on the 4 hour on Friday. Previous extension earlier on in the week. But now we've gapped up. So that's a really good gap fill opportunity on that Swiss yen. Yeah, that looks like a nice little short. You've already had the reversal alert on it on the 15-minute time frame. And your retest. So there's your M pattern. Okay, so if we start to break down, you're looking at sort of 1 1/4 ADR to the downside. So plenty of room there. You've got a few hourlies as well. New Zealand basically is most of that, and Canadian dollar still. So there's a few opportunities this morning. I'm not going to go through all the charts today. If you've got any pairs specifically you want to look at, let me know. But I'm struggling with my voice this morning, as you can probably hear. Trying not to talk too much, although that's very difficult. Break. It's very, very weak this morning. I think we're probably stuck at previous support. So if this doesn't break to the upside today, look for a break to the downside, potentially back down into this little resistance area that we had from Friday or to Friday's close. So it's one of those days where you're going to stop out on the long. The short, if you look at it from a risk reward basis, is probably around about 2R. 3R would normally be my target, but if you take a 2R today, that's the sensible thing to do, because basically you're going to take one loss, take a 2R win, which leaves you +1. When you got low volume days like this, just don't get greedy. Just take what you can get. But doesn't look like we're going to get a lot today. Sorry, mumble. What exactly is Globex? I think you call the pre-market session. Yeah. So Globex is basically in the US. Globex is this. So the pre-market. So it's the US's electronic trading system. If you look it up, I can never remember what it stands for. Globex, CME Globex is the Chicago Mercantile's electronic trading platform for derivatives like futures and options. So Globex basically is, there you go. Read that at your leisure. But it's basically the pre-market. So all Globex is pre-market. So if you look at the, this is the Dow. So this is the open. That was a news event. So this is the non-farm payroll. But this is Globex. So Globex is pre-market. So it's while America's asleep, the algorithms and electronic trading systems in banks and institutions are conducting business. Yeah. So it's their attempt to make the futures market 24/7. It's notoriously low volume. Yeah. So a lot of people try to use HFT strategies in Globex. So it's the Asian session. There you go. There's the open. Bang. And this is why we trade the open. Yeah. We know when the market's going to wake up, when it's going to move. This is random. Some days you get Globex sessions like that. Some days you get Globex sessions which have a news event in Europe, which will make a sector purchase happen in a market, and that will suddenly drive the Globex stocks. Sometimes you don't. You know, it's very, very random. It's very hard to predict how to trade it. Yeah, which is why most traders you will find do not trade Globex. Yeah, it's just because it's most of the candles in Globex are tiny little useless candles, and then you'll get some algorithm somewhere correct an order and take profit on a leg or something. You get a spike where there's a volume spike comes in, but you can't predict any of it. So the Globex session is the quiet, but some days Globex. I mean, this day Globex, you buy the lows and sell the highs in it. You can make a hell of a lot of money very easily. Same as you can with the Asian session. Yeah, you look at the Asian session on any US or European FX pair. Yeah, yeah. This is the equivalent to Globex. Yeah, that's the New York Open, pound US dollar. But that's new. This is you can't really look at that day because it's news. It was non-farm payroll. But yeah, that's Globex in the pound US dollar. That is somewhere around about 8 or 9, or somewhere between 7 o'clock to 9 o'clock in the morning. London wakes up. Yeah. So, a lot of people try and trade this, but the trouble is the difference between Globex and forex trading in Asian session. Globex is contracts, it's futures. So you've got fixed contract sizes. There's no spread. Well, there is. There's one tick spread basically in futures all the time. In FX, when you try and trade this, your spread is going to be way too big to actually make this viable. So you see all these EAs on the MQL5 marketplace, which are like Nighttime Stalker and Aussie New Zealand Milker and all this sort of crap. They're basically trying to squeeze money out of the Globex session, out of the pre-market sessions in Asia. So it's an Asian session scalping bot. But when they do all their testing, the P&Ls look like that. When you actually trade it live, the P&Ls look like that because they don't take spread into account. The spread here is 10 times bigger than the spread here. And the brokers will spread this whenever they see fit because they can always go, sorry, you're trading the New Zealand session. There's no liquidity. You asked us to fill your order. I know the market was there, but we had an order there, so we filled it for you because it's in your contract. It just doesn't work. So you can try it, but it won't work. Long term. But yeah, that's all it is. That's what Globex is. Are you trading gold this morning? No. Don't trade gold in the mornings, only in the afternoons. Morning, Michael. Morning, Aussie dollar, US dollar, Franco. Have a look at that. Gold is a futures product, so gold you trade in the afternoons when the US session opens. Aussie US. So obviously we're expecting weakness in the dollar. Obviously, that monthly high is your upside target. You can see the dollar weakness starting to creep in now. The Aussie dollar is being strong anyway. We've had good news for the Aussies. But that news is a little bit old now, so it might be a case of the Aussie starts to weaken off and drop a little bit because they've put all the movements into it. But the dollar should be starting to weaken off now. So I'd be looking really ideally for long only on this. I don't think you're going to get an opportunity to get in. But if you are short on it from that extension on Friday, you had a retracement on it, but it's one of those where I don't think you probably take it on the same day. I'll be looking for a bounce out of there at 175 ADR, see if you can get some kind of bounce out of that. But you should be seeing fairly decent market structures starting to move to the upside on it now. Flat for ages. This is the other thing we've got now to contend with. We are starting to come out of summer trading, so we should start to see some volatility coming back into the markets as well. The volume will start to pick up and we'll get some more movements, more explosive movements. So I'll be watching that level there for shorts back down into propulsion. So look for, but equally, we should be breaking out of that level. It's whether or not they're going to dump into that US dollar until Thursday. So obviously Thursday we've got the so there's all your bullish news on the Aussie, and prior to that it was sort of all forecasting as target. But retail sales, huge increase in retail sales. But inflation, huge increase in inflation. Yeah, so they're not going to be dropping that interest rate again soon. Where are we? 3.6 now. So what was I going to say? Yeah, so news-wise, it's whether or not they decide to dump the dollar prior to Thursday. Wednesday's the first opportunity for them to do so. I think it's a case of if we get a negative number here, that will be it. We'll be off, because if that PPI number comes out, the purchasing price index, if that comes out low, you will find that will have dropped CPI. So it's a precursor to what we would expect that number to be. So PMIs, PPIs all feed into, so the purchasing side of things and the manufacturing side of things all feeds into consumer pricing. So all of that stuff, when it comes out negative, means that that's pretty much guaranteed to be negative as well. So, but it's whether they do it this side of Wednesday, Thursday. I mean, at the moment, we're looking pretty damn strong this morning, aren't we? We're 3 hours solid straight up. But this is being caused by the New Zealand dollar. So Aussie dollar will be dragged along with the New Zealand dollar, and the New Zealand dollar is on a rally at the moment. So as you can see, New Zealand dollar streaking away. Aussie and New Zealand will do the same thing most of the time. So New Zealand dollar, US dollar is very much the same thing. There's a lot more upside on New Zealand US though. Yeah. See the difference between the New Zealand dollar and the US dollar. The Aussie dollar has had New Zealand dollar, US dollar, and the Aussie dollar, US dollar. The Aussies have had a lot more better news, so therefore they have stayed more stable against the dollar. New Zealand hasn't. It has dropped against the dollar. Nice market structure to the downside. Either way, the dollar's going to drop, which means they will both start to rally. Assuming they do what they say. Yeah, don't forget Trump's in charge. I say with a pinch of salt, it's almost guaranteed we've got 0.5%, definitely got 0.25%. We've got another week yet before Trump can manipulate the market. So he could easily go, do you know what? I've told Powell to freeze interest rates because X, Y, Z. And the markets will go into turmoil. So yeah, everything I do and everything I say is based on what I think is going to happen, based on what normally happens. Abnormal stuff, you can't predict it, can you? Do what the hell it likes. We don't sleep, we pass out on laptops. Yep, that's true. Yep, so basically the Globex session is all the people in the US accidentally hitting the buy and sell button while they're asleep. Dow's rallying, so hopefully the DAX is as well. Yeah. So new high of the day gone in on the DAX. It's not the most convincing high of the day, is it? But it is there. So upside watch, there's a couple of levels. I mean, you can watch this level as well. So, I mean, it's a bit difficult to pick that one, but somewhere around there is your upside potential resistance. But, I mean, this whole area here before the breakdown, this is all full of accumulation, and the accumulation resulted in a sell order. Yeah. So this whole thing here, you are going to be hitting and meeting sellers potentially. Yeah. But this is, this is a result of non-farm payroll. This is a result of a manipulation. Don't forget the interest rate came out as expected. There wasn't a shock. This is the thing. So we did not get a shock on non-farm payroll. I really want a backwards and forwards button like we got on. I have to put that in on that. So yeah, this is what the market is looking at. Yeah, we call it non-farm payroll day. I don't know why. It's the unemployment rate. That is the main. There's 4 key drivers in the world that drive financial markets. This is one of them. I don't know why we call it non-farm payroll day. We should call it unemployment rate release or something. But anyway, it came out as forecast. No shock. So that reaction you saw on Friday was caused by a slight miss in the non-farm employment change, which we knew was coming because we got told about it the day before. Usually those two are tied up. So that move on Friday was more of a manipulation or profit take move I think, than a directional movement. So this accumulation drop, they're probably all out of that. So there may not be sellers sitting here, which means we're going to come up and retest the high from Friday. We'll see where we go. Either way, take the money when you got it. If you're happy with the money, take the money. If you're happy with 0.67% on your account today, pop it in the bank. Right, that's all I've got for you this morning. So this week, I've scheduled streams. We're going to do this morning, obviously. We'll do this afternoon, New York session, normal session this week on Wednesday morning, not a members only one. And then Wednesday afternoon, and then morning on Friday and afternoon Friday. I'm putting together a new streaming schedule for this members area. So this is the new members area of the website. It's got tons and tons of tools, information, everything we need for all sorts of different strategies. I'm putting together the live stream section of this and the education section of this week, hopefully. So I'm going to be changing the normal YouTube streaming schedule. So there's going to be less of them and more of it in here. So it's more of an interactive type of environment. So I'm probably going to move over to Zoom for those, and then we'll still be doing live streams on YouTube, but just won't be as often. So if you want to be a member, you can be a member. If you don't want to be a member, you can just watch the live streams. You know the strategies. I'm just going to teach them in depth. Missed your insight. Glad you're back. Thanks very much for the $5, Franco. Very much appreciated. I'm glad to be back as well, although I've come back and got a cold immediately. So it's the stress, isn't it? It's the pressure. When you have time off work, isn't it always the way? You have time off and you immediately get a cold because your body just goes into mode. And then as soon as you start doing anything strenuous, your body goes, I can't handle this. I'm immediately going to get ill. Gold. Yeah, guy can look at gold for you. Thank you, Franco. Much appreciated. There's gold. It's going out into new highs. I'm not sure what Lion Atlas, what do you want me to say about it? We're at all-time highs. It's parabolic. Dollar's going to fall through the floor. What do you think you should be doing with gold? Looking for longs or shorts? It's a breakout long at the moment. So gold's one of those symbols. You can trade it any time. We know it moves on the futures market open, but this morning gold's moving beautifully. But look at when it actually kicked off. 8:35 this morning. So at 6:30 this morning, I was in the shower. You can't, it's random. You're going to the moon. You're already at the moon. You can't go to the moon. You're at the moon. Don't forget, all you're doing here is you're trading the US dollar. Yeah. This is the same as pound US dollar, euro US dollar, Aussie US dollar, gold US dollar. You're trading a US dollar cross. If the dollar goes down, this goes up. If the dollar goes up, this goes down. It moves independently on the commodities markets as well. So it's a little bit more volatile than all the other FX pairs. So you will get movement, obviously, independently on this. But yeah. It's not going to the moon anymore. You've got a 3-bar reversal gone in there. Beautiful sell signal. I've been working profit-taking pullbacks. Good job. So beautiful 3-bar reversal there. Textbook short. So look at a retest to Friday's high, potentially. High of the morning. So that's a good entry point if you want to go long today. Wait for it to pull back into here. Not a very strong breakout today, though. Look. So that's your propulsion gap, first propulsion move of the day. So somewhere in there, I think, is probably the best place to buy it. But if it gets there, it may just go today. So it's not how I trade, though. Don't do intraday stuff like that. Right. That's all I've got for you this morning. So be back this afternoon at 2:30. We'll have a look at the US indices, trade the NASDAQ, gold, and the Dow. See how we get on there. DAX this morning, up to you. I would be cautious this morning. I don't know what 3R is, but rough, if we get up to Friday's high, definitely want to be taking it off because that's going to take some movement to get it up there. But we are long, so we'll go with the momentum, see where we go. See how far we get. All right, so back this afternoon at 2:30 for the New York Open. Anything you need, I'll be in Discord or Telegram. Other than that, have a good day. Hope that screams off, and I will see you this afternoon. Have a good one.